Monday, traders, and welcome to a new week in markets. Okay, last week was a pretty tough week. Imagine for traders, a lot of selling across asset markets, a lot of risk-off trading, a lot of volatility. But look, the markets in the US session on Friday actually did end up on a positive note. So S&P, Nasdaq, finished up 2% and 2.5% respectively. So the selling was abated on Friday. Maybe a little bit of selling exhaustion, and that also came in the face of some poor economic data that came out in the US on Friday. We have the University of Michigan consumer sentiment that dropped like a rock. That is now at levels last seen 2022, and then also the components of that, the inflationary expectations by consumers 1 year and 5 years out. Have both risen and risen quite meaningfully to 4% and over 4%. So the consumer does look like they're struggling, and certainly they are still worried about inflation in a big way. But yes, the equity markets did ignore that data, and for the week, in the end of the week, even though US equities at one stage were down about 4.5%, they closed the week only being down around about that 2.5%. So maybe some positive sentiment may feed into early trading for the start of this week on the basis of that US close. We'll see. Okay, so this week is a big week for central bank meetings. There's quite a lot of them. We do have the Bank of Japan, we do have the Fed, we do have the Bank of England, and also the Swiss National Bank. The first cab off the rank is the Bank of Japan. We get them on Wednesday. Now, the Bank of Japan still has a policy rate of 0.5%. That is way too low. They will be raising rates. They are the only central bank globally that will be raising rates this year. Japan is coming out of the deflationary situation. So it's just a timing issue for when the Bank of Japan does raise rates. They raised rates in January, and it seems as if like the Bank of Japan, it's not going to follow up so quickly. So no one's expecting anything from the Bank of Japan rate-wise this week. But what obviously the market will be focused on is Governor Ueda, the governor of the Bank of Japan. So his comments post the actual decision, and whether or not he's going to prepare the market potentially for a rate rise sooner rather than later. And the earliest we're looking at is potentially May. But certainly, look, if you are trading dollar yen or trading yen, you probably will see some volatility on the back of this Bank of Japan meeting. You need to be focused on that. So Wednesday night US time, we do get the Fed. Fed's always an important meeting. This one is an important meeting in that we get the dot plots. So we get the dot plots once a quarter, and that is when all the Federal Reserve members place their dots of where they believe that Fed funds rate will be over the course of the year and further out in subsequent years. Now the market is now starting to price in, or has priced in, that the Fed will cut rates 3 times this year. The last dot plot that we had from the Fed last year, they only had one. They agreed on one guaranteed cut for 2025. They almost got to 2. So the market obviously will be looking at that dot plots just to see whether or not the Fed actually starts moving towards market pricing. So pricing in more dot plots and more rate cuts for this year. Obviously if they do that, that's going to be seen as a dovish meeting, and obviously that'll have an impact on yields, potentially yields lower, and also the US dollar lower as well. Look, but the Fed does have a couple of things it's worried about. One of the things obviously is the lower growth that the Atlanta Fed nowcast has been showing that potentially US growth now is below 0 and is negative, down towards minus 2%. So the Fed's going to be worried about that, no doubt. That's something that will push them into rate cuts, but on the other hand, they've got Trump and his tariff policies to navigate, and the fact that they are inflationary. So the Fed's they're in a tough situation where not they view the slowing growth more importantly, or Trump's tariff policy. So look, it could also be a non-event, this Fed meeting, and they might just kick the can down the road and want to see how the tariff policy influences inflation in subsequent inflation data coming up in the next couple of months. So anyway, no doubt still, look, all Fed meetings give us volatility, so that's another thing you need to be focused on as a trader. Next on Thursday is the next meeting. We have the Swiss National Bank. Now this one will be an interesting one because the market does expect them to cut rates from 0.5% to 0.25%. So at the moment, you've got Bank of Japan and Swiss National Bank, both have policy rates at 0.5%, and it's the lowest policy rates out of all the big central banks. So the Swiss National Bank taking theirs down to 0.25%, they'll actually be lower than the Bank of Japan. So that is actually quite interesting. We've been talking about short Swiss yen for quite some time. This could be the week that short Swiss yen finally starts to move lower and break that big technical top formation. Certainly a break below 165 would trigger that, but suggest yes, that short Swiss yen trade could start to work now with the yield advantage now going towards the Bank of Japan, and especially if we did see a Bank of Japan that was hawkish at the beginning of the week, then that trade, short Swiss yen, would potentially be even a bigger mover. Then the final central bank meeting we have is Bank of England. They are expected to remain on hold at 6.5%. So yes, key takeaway, look, big week for central bank meetings. These guys do move markets, so let's see how that all pans out. Worth noting, gold has been on a tear. Yes, we talked about 3,000 targets, being highly realistic to be met on Friday. That happened. Didn't stay long there, printed a high of 3,004 before we saw some profit taking kick in. But we did close at record closing levels on a weekly basis at 29.88. Look, when a market's doing what it's doing, record highs, that is a bull market. I'd suggest trying not to fade any of these moves. And obviously buying the dip on gold's working quite well. But the other precious metal that's working quite well at the moment is silver. Silver's actually up 16% for the year, outperforming gold even. So need to watch silver. Big level top side that market's looking at the moment is $35. Certainly a break of that, you're going to see some more technical momentum buying and potentially a spike higher from there. So yes, keep your eyes on silver moving forward. Good luck for the start of the week, and we'll check back in with you shortly.